Hey, welcome into the channel, everyone. My name is Brent. Welcome to Brent Investing. In today's video, we're going to go hit a couple of things on the head here. We're going to cover about 5 different areas. We're going to be focusing mostly on the M1 Finance account. So number one, we're going to go over the M1 Finance holding and performance over the basically entirety of the portfolio, right? Number two, we're going to take a look at the weekly performance, take a look at what stocks went up, what stocks were down, what are the best performers, worst performers. Number three, we're going to go into the activity over the past month because we haven't released a video in a month. So we did actually make a few purchases, not a whole lot, right? I haven't been adding a whole lot of capital into the market. The market still has a lot of uncertainty with whether it's going to go up or down. The Fed may continue to raise rates by 0.25% here in the next 1 to 2 months. Inflation is still not fully under control, so prices are continuing to kind of taper off. But everything is still kind of priced pretty high, making a lot of just general life harder for a lot of individuals. So we'll go ahead and cover also number 4, the breakdown of our dividends. I did purchase some companies recently, so I'll show you guys a free website you can use to track your portfolio, track your dividend income completely for free, and I'll show you how I update my portfolio in there to kind of track all of that information. And then finally, number 5, I have been doing a couple options over on Merrell Edge. So if you guys would like to stay tuned towards the very end, we'll go ahead and do a Merrell Edge update of some of the options that we've done here in 2023. It feels really interesting to say that just because of where we were a couple years ago back in 2020, where the market had been primarily red. Kind of going back, I do see that our portfolio for a time, like I was covering all the way down during the heavy downflow in the market where our portfolio hit a bottom of around 36,000. And prior to that, I don't know if I had the screenshots here. Maybe this is just a year ago, but we were at 32,000, 30,000 just 1 year ago, right? 29,000 right here. So it's really interesting to see how this thing has really performed over the last few years. So with that said, if you guys are brand new here, go down below, like, comment, stay subscribed, hit the bell to be subscribed, and receive all notifications. And let's go ahead and jump into the M1 Finance portfolio. Okay, so we're going to start off and take a look at the M1 Finance portfolio, looking at the overall performance. So heading over here to our Invest tab, this is going to go ahead and showcase our Dividend Beast portfolio. This portfolio is designed to primarily house dividend companies, which is what it has in it. If we take a look at the overall performance, this portfolio is up 58.84% since it was created back on January 7th, 2018. So this portfolio has been active for 5 years now. Yay, 5 years is how long this portfolio has been active. It is a Roth IRA, meaning that it can only be funded so much per year. So over the last 5 years, we've been able to fund it. If we go into our funding tab, we've been able to fund it 3-4 times with 6,000. So that's 24,000 right there. And then 27 and 28 got combined into one. So 35,000 capital has gone into this portfolio total, and this portfolio is sitting at $47,000 in total. So we have received quite a bit in capital gains. We've received about 7,000 in capital gains, and our earned dividends continues to go higher and higher. This is the number that never falls, regardless of what the market does. You cannot take away the earned dividends that we have been paid out in the account and reinvested, earning us more shares and future increased dividends from those shares that were purchased, right? You get money paid from your companies that you own, and then you take that money and you buy up more shares of the companies that you love and own. And it just continues to snowball in that fashion. So together, we're up 58.84% overall since the inception of this portfolio. Our best performer has been Apple, up 228% since we've purchased it. AbbVie is in second place at 126. ABM Industries is up in third at 120. Lockheed, Main Street, WP Carey are all kind of nice up there. BDCs wise, this one had been beat up for a while back in the last year. WP Carey, it's been a while since I've seen any REIT way up in this, as high as it is in this chart in the overall performance. And then it just kind of trails all the way down here. And we can see our worst performer on the lower end of the spectrum is a REIT. This is an interesting one right here. that's within the MJ industry, and they've had some issues with MJ legislation. I don't know, legislation. I don't know if that's the word I'm trying to use there, but it's becoming cheaper and cheaper to sell the product that they're trying to sell, which just means profits are affected by that, and more people are growing it and selling it cheaper and cheaper. So that kind of works all against them. So while this may have started off as a pretty positive company, it has turned sour. And I'm not sure if this one will actually turn around long term. So we may have to cut our losses there and just kind of move the equity into another position. Stanley Black & Decker kind of in the same boat. You know, not a lot of people are buying those expensive tools at the moment to start new projects for their house, just because not only are the tools expensive, but the wood and all the other items that are required to do specific deck projects or house projects is also pretty expensive. So these two right here are kind of like sore thumbs in the portfolio, where I'm not really sure if they will recover long term, 5+, 2 to 5 years plus. Digital Realty Trust, no issue with this one. I don't believe, while it's down 35%, I think they're in a really good area where I really don't see where they're going to have too many faults. Yes, they're down 35%, but that's something that they can make up and recover from. Clorox has actually done really well recovering from down 35 to 50% at one point. It's only down 21%. So that's pretty positive. Colgate only being down 2.35. That's really positive. Waste Management is almost positive. Not quite, but with dividends being reinvested and all that, they should be net positive here shortly. So they're just a nice utility company, just long term, raise their dividend, and slow but steady show upwards growth in their overall share price. So I'm not worried about any of my positions outside of these Stanley Black & Decker and IIPR. Those are positions that I'd probably remove out of the portfolio, but everything else I'm pretty comfortable and happy with. So that is number one, the overall account performance and where we're sitting at right now. Now jumping into number two, our weekly performance, we can see here, overall for the week, we're up 0.83%. That comes from market gains 365. We did also sit through some ex-dividends and earn some dividends, get paid out to us in the future of $23.98. We can see that our best performers is Cisco. Cisco came out with their earnings, some number in there came out really positive. So boom, all of a sudden they were very positive on the week. If I were to go into this company individually and look at them here from the 14th to the 16th, they just skyrocketed there in overall return there, which is net positive for Cisco. I'm actually really surprised that they're recovering as much as they have. So I'm kind of happy that I didn't sell out of the company, but they did really well this week. Stanley Black & Decker, this is one that we just kind of talked negatively about, but they're up 3.9% on the week. BDC insurance right here is 2.66. Clorox, there's some recovery in Clorox, and a few others. We can see here down towards the bottom, IIPR is actually continuing to move to the negative. Pfizer was already trading pretty high. It's been on a downtrend for a while with no end in sight. I feel like it's kind of slowing down, but it's still kind of falling on a week-by-week basis. So Pfizer may continue to fall. Royalty income, WP carry, these are kind of already pretty positive in the portfolio. WP, Lockheed, Realty, they're already really green. So having them pull back slightly is okay. And J&J, they're on a downtrend still. I purchased more Johnson & Johnson, and that is the weekly performance of number two. Now, jumping into number three, the activity so far. Now, in 2023, I really haven't done a whole lot of activity here. You can see that we have received quite a bit of dividends. Starting back on January 3rd, right? This is the very first official day of the year. I think in the market, I did 7 buys. We had some capital in the market or in the portfolio. I just want to kind of start throwing it out there into companies that I believe were not in a terrible position, but I could, add equity into, and they may recover to the upside. Waste Management did actually end up recovering a bit. Cisco ended up recovering a bit. JP Morgan, I think, had recovered a bit. And I can actually go through here and take a look at these. I think it was this one. Yeah. I can kind of, I don't want to do that now because it's going to draw out the video a little bit longer. But these are the companies here. We did see that J&J was kind of continuing to fall off a bit. But they were just, I'm pretty happy with the buys here that we started off early in the year. I don't know if I added these into my updated dividend tracker. So That's something I'll look out for when I go to update the dividend tracker together here in a few minutes. And then here recently, on February 6th, so within the last week or two, I did make 2 additional purchases, about $1,000. We bought Essex Property Trust, $519.10, and Johnson & Johnson, $519.11 there. So those are my only purchases here in 2023. We do have a little bit of capital remaining in the portfolio. This is just from dividends that continue to flood in on a weekly basis in weekly dividends, which is really nice because at the moment, I'm not funding this account at this time. We're just kind of holding off on little things and trying to get it situated, where we want this portfolio to go, or if we want equity to move into other positions and other portfolios. So that's kind of how we are at this moment. But overall, activity-wise, it is doing really well. We can see here for the week, again, we're at 0.83. If we compare that to the S&P 500, it is down 0.28% on the week. The Dow Jones down 0.13% on the week. The NASDAQ up 0.59% on the week. And the Russell up 1.44% on the week. So overall, we beat out the 3 main indexes, but did not get close to that Russell. That Russell did really well. But overall, if we take a look at the 1 year for all of these indexes here, S&P down 6.2, the Dow Jones down 1.41, the NASDAQ down 14.07, and the Russell down 3.3. If we take a look at our 1 year performance, we're up 2.02%, but that is because of those earned dividends. So if we remove the dividends from here, we would be down negative, but not by much, right? $409. That would be probably, I think, negative 2%. If I do the math correctly, we might be down about negative 2% on the year with dividends removed from that. But with dividends included, we are net positive by 2.02% on the year. So far, I've been happy with the performance of several of my companies. Not all, but, beggars can't be choosers, or choosers can't be, I don't know, the whole thing there. But let's go into our dividend tracker, okay? So dividend tracker, we're using trackyourdividends.com. This will be number 5, I suppose, in the way that we're kind of tracking our video. So number 5, how to track your dividends completely for free. If you head over to this website called trackyourdividends.com, you're going to be able to add your holdings into this account for free. You basically kind of add an account right here. You give it a name of the account. I have Merrell Edge, my 401k, my M1 Finance account. Then you can just do the update manually. If you don't want to pay to link your account in there, I just do it manual. Then once you have the account name added, you just go in here and add a ticker symbol. So I can add Apple, for example, and select it from the list. Add how many shares I own of that and the cost per share that I purchased it at. And then what it'll do is it'll punch it and put it down in this area down here where it kind of showcases how many shares you own, the average cost that you purchase those shares at. It also gives you your profit and loss and other information up at the top, like your current portfolio yield, your yield on cost, your annual income of your portfolio, and so on. So one thing that I notice here is that this hasn't been updated in a while, because this is showing that we have $45,032, whereas over here we are sitting at $47,511. So if we go back to our activity, this is because some of these are not added into here. So for example, we have to add Essex Property Trust, we have to add J&J, and then also in the early portion of the year, we purchased, where were they? Essex and J&J. So Essex, I'm just writing them down on a spreadsheet here, so I can look for these on the tab here, and then update these ones on the dividend tracker. Okay, so I got them all listed here. So I click done, go to my holdings, search for Essex Property Trust, and Essex right here, we can see that we own 7.88 shares in our cost basis. Is that what we want over here? Let's go back to track our dividends. So let's go Essex, and if we hit edit, it wants our shares, our current shares, and our cost per share. Okay, we want to record our cost per share, which is that 149 right here, 249.12. And then we'll go and look at J&J. We'll grab that information here. So Johnson & Johnson, we now own 14.43918 shares at an average cost of 153.08. We then go to Waste Management. We have 13.66339 shares at a cost basis of 157.48. Then we go down to Cisco. We own 24.52874. Then finally, WP Carey is, I thought I saw it right there, but my eyes, yeah, see, it's right there at the bottom. We own 23.09582 shares at a cost basis of $69.51. Okay. So there we are. We have all of our shares. So let's head back over to our dividend tracker. And then all we need to do here is update this information. So number of shares, we have 7.88 shares. So we can see we increased our shares nicely. Our old cost basis was 258.03. It is now 249.12. So we lowered our cost basis on Essex Property Trust by a really good amount right there. J&J. Let's go ahead and edit that one. We went from 10.1412 to 14.43918. Our cost per share did increase from 147.05 to 153.08. So we did actually increase our cost average there. We go to Waste Management right here. We are going to go ahead and select Edit. And our Waste Management shares went from 12 to 13.66339. And our cost per share went from 157.55 to 157.48. So it just lowered it slightly right there, not a whole lot. And then we go to Cisco, not this one, it's SYS, that one, Cisco Court Food Delivery Service. So we went from 21 shares of this one to 24 shares in 0.52874. And our cost per share went from 57 to 59.42. So we did increase our cost basis on that one. But again, it's okay. Like, you're going to have to increase your cost basis on companies that you enjoy because they're moving to the upside, which is positive for you because they're making you money. And sometimes they're going to have a little bit of kickbacks where they're going to fall a little bit. And that's when you want to take the opportunity to buy. JP Morgan went from 16 to 17.85524. Cost per share went from 118 to 119.86. Update that. So you can kind of see this is what I do here. And it doesn't take a long time to kind of do this process here. So anybody that's looking for a dividend tracker that is fairly accurate, I do recommend this site here. So Starbucks, 27 shares to 29.11443. Our cost per share did increase from 84 to 85.35. Update that. Okay, so now this number here should match up with this number here. So our total value is $47,011. And here, $47,511. So that is perfectly matched up. And our annual income, I think we were staying around $1,300 and like $1 or $2. So we increased our annual income by about $70 and some change over the, so far in 2023 by adding equity into the market. We increased our overall income for 2023 by roughly $70 some. So that's a pretty good increase over the last 2 months. That probably is not going to be continued throughout the full remainder of the year. And that's not quite elite. I was looking at that. If that had been a 3 right there, our annual income would have been elite and Geek Talk. But that is the performance there. Okay, so jumping into the last bit here, we're going to go ahead and cover the Merrell Edge option so far here in 2023. And this will be sort of the final area that we're going to cover here. So we're over jumping on the Merrell Edge side, and we're going to be taking a look at the taxable count. So inside of the taxable count, I went ahead and scheduled this for the time from the first, from the 1st of January until the current date, which is the 18th. And as of the early portions of the year, I did make an option sale back on the 4th of January. I started by selling the option, a call option, at a price of $405 on SPY. I sold 4 of those options for $4.07, and I acquired $1,625.36 in premium. Now, during this time frame, we did also hit a dividend. So SPY in the taxable account paid out $732.87. This was all reinvested at the current market price So all of this was able to just buy back probably one share because I think SPY's priced around $400. So it purchased about 1.5 shares in SPY just by reinvesting it back into itself. And then I did see that the market at the time when I had sold it at 405, where is my information here? SPY. So back on, we'll go look at year to date. And then we'll look at the Merrell Edge. So I sold it on the 1st at 405. So when I was looking at this back here on the 1st, the price of SPY was at about 384, right? If we look around here, 384 was around where it was priced. And I saw this resistance for the 50-day, 200-day at 405. I thought, hey, this 50-day, 200-day, there's going to be some resistance at this point, and there was resistance right here. But we can see it broke through, it came back down, and then broke through again, and it has been actually trading higher than 405. And there's a couple things you can do. You can kind of wait it out for the option to expire, but you might have your shares sold out of your account. And I don't want to sell my shares because my SPY has actually hit over 1 year of owning those specific shares. So anytime I get paid out a dividend, it's a qualified dividend, which gets taxed less than a non-qualified dividend. Any companies that pays out a dividend that you haven't held over 52 weeks gets at a non-qualified state. But after you hit that 52 weeks of owning that specific company, they become qualified and get taxed at a lesser bracket. So it's optimal for me to just not want to sell them. So instead of selling those options, I did end up repurchasing the option to buy it back. So it did cost me quite a bit to repurchase it back right there. You see that purchase back? So initially, let me go ahead and bring out my handy dandy calculator real quick. So I ended up selling it for $1625.36. I ended up purchasing it back for $2,746.60. So I was in the hole by $1,121. But what I did is I raised my option to $415. Because now with the history that is shown here, it's going to be a bit before it's going to hit $415. I think we have we hit a nice peak. A lot of people are beginning to question if the market can really move higher. Inflation and the Fed are saying that, hey, inflation, it may look under control, but we are kind of uncertain the way that they're kind of wording stuff, and they might raise rates another 0.25%. So a lot of that talk has got the markets really fumbling around. So I set it just high enough where I believe I shouldn't have to sell in the future, and it should expire worthless. So I did collect the premium in there of $4,149.30. So net positive wise right now, I'm positive by $3,028.06 in premium so far, but this doesn't expire, I think, until around, I'd have to look at that option. I think it doesn't expire until about, I think it expires in April. I think that's what I said it for. Maybe it's March. I'm not sure if it's March or April, but either way, we'll see how it goes. I don't think the SPY will hit 415. Moving from the taxable account over to the IRA. So inside the IRA, I do own Apple and a few other companies in here, but primarily VTI and Apple. So I did another option sell on VTI. I collected $299.34 in premium. Same with the market. I set a set price of $200 on the premium. So here, back on the early portions of the year on the 4th, right? VTI had been trading around 192. I saw that resistance of about $200. So I set a call option of $200. And what did the market do? It made it up to $200, broke it over, stayed it up there for a little bit, and then, shot back down and came higher and has been moving upwards. Now, at this moment right now, it's trading at $205.08. Again, with the Fed and inflation and all the other kind of uncertainty in the market, the price here is kind of trending sideways and may actually retest this 200-day, 50-day, or may break back low. So again, what I ended up doing here is I did repurchase back my VTI. I did end up paying a little bit of a premium there. I paid $750 to close it out, but then I resold it, and I resold it for $11.63 per share, which collected me a net premium of $1,162.32. And that is where it's currently sitting at. And I did collect a tiny little dividend there. from Apple of $3.92. So not a whole lot there has been collected in dividends. But as far as the premium goes, we are sitting at, let's go ahead and subtract how much I paid there, $750.65. And then I collected 116232. So we're sitting net positive in premium of $711.01 in this account. And then I do have about $411 in cash. That's just kind of sitting there at this moment, collecting interest. There's not a lot of interest there off that account, but overall options are going well within the IRA so far for this year. And then in the Roth IRA, I only own mostly VTI in that one, and I basically did the exact same functions that I did in the prior one. I sold it at my exact same strike price at $200. I collected about the same premium of $299, and then I repurchased it back because I didn't want to sell out of those shares at $200 when this option expired, so I repurchased it back, and then I sold it at essentially the same price at $11.65 right here. And I'm still net positive in premium for the year. This contract doesn't expire until April, I believe, or the following. What's after April? May. So we have quite a few months for this one to hit. It's at $205. So with, and these are actually net positive in premium right now just because the market has fallen in the last few days. So those contracts are positive. If the market continues to kind of downtrend and retest the 50-day, 200-day moving average, I will probably close the position early and just be out and be net positive in my premium for the time being. Because what I want to kind of see here is some cross underneath, and it kind of trended for a while here. And then, short-term cross underneath, the market dipped there in early 2019, but short day, 50-day cross over that 200-day, and then a nice steady uptrend for a few months now. We had that recession that wasn't really planned with the whole everything shutting down. That caused everything to fall very sharply. But then we saw that short-term 50 blue cross back over the 200-day, the long. And there was a really, really nice uptrend for quite a while. Now, recently, back in early 2022, that short-term 50-day crossed underneath the 200-day and dragged it down for quite a bit. But what we're noticing here is that the short-term 50-day has actually crossed back over the 200-day. So if this can be the normal trend, it might not be in my favor to have contracts that would cause me to sell out of my shares. It would probably go back into the whole just buy a little bit at a time on a weekly basis. But right now it is looking net positive for the market. There is uncertainty out there with inflation, the Fed continue to raise rates and stuff like that. But overall, just I believe to kind of be careful, right? You don't want to sell positions unless you have to. And right now, I'm just kind of in the wait phase. So if I get the opportunity to close out of my options and still keep premium, I will do so, and then just kind of hold off on buying selling any additional call options. So that is going to be it for this video. Let me know down in the comment section below if you guys have any comments or questions. Remember to go down below and subscribe to the channel, hit all notifications, and give this video a thumbs up. If you guys have any comments or questions, let me know down in the comment section below. Okay, bye-bye.